My name is Jeff Oliver. I'm a partner in the Antitrust group at Baker Botts. This will be the first in a series of brief weekly reports focusing on the important regulatory and legislative actions during the first 100 days of the Biden administration. Today's edition will focus largely on antitrust, where there have been a number of important headlines both at the Department of Justice and the Federal Trade Commission, and also in Congress. We will also provide a brief overview of the energy-relevant actions by the administration during the last few weeks. We will continue to provide these updates throughout the first 100 days of the administration. In antitrust news last week, the FTC and DOJ pushed pause on the practice of granting early termination for merger reviews under the Hart-Scott-Rodino Act. Under the HSR Act, deals that meet certain thresholds must file notification with the DOJ and the FTC. The notification then gives the agencies 30 days to review the transaction. Of course, the vast majority of transactions that file under HSR carry little to no antitrust risk. And so the granting of early termination on that initial 30-day period was quite common. The agencies indicated that they expect the suspension of early termination to be brief. Still, the decision was controversial at the FTC. Two Republican commissioners released a statement calling the action unwarranted. Once the suspension is lifted, it's unclear whether there will be then a higher standard to obtain early termination. We will keep you updated on that question. In other antitrust news, on February 4th, Senator Amy Klobuchar and other top Democrats introduced a Competition and Antitrust Law Enforcement Reform Act. The proposed legislation, as written, would result in major changes to antitrust enforcement and merger review in the United States. Perhaps most notably, the bill proposes a new standard for antitrust merger review. Currently, antitrust agencies may block mergers that will, quote, substantially lessen competition, unquote. Under the new legislation, the agencies would prohibit mergers that create an appreciable risk of materially lessening competition. The new standard, of course, is much higher than the old standard. The proposed legislation introduces a number of other measures oriented toward increasing antitrust scrutiny and would also increase budgetary resources for the Department of Justice and the Federal Trade Commission. It's worth noting that, like most proposed legislation, the bill is likely to go through several rounds of negotiations and drafting before being put to a vote. We will continue to monitor the developments and keep you updated as it progresses. Obviously, the proposed legislation and the suspension of early termination mentioned earlier signal an intent to heighten antitrust scrutiny in the United States. It's worth noting that 2020 data indicates that such scrutiny was already quite high. The number of major investigations into proposed mergers last year was among the second highest number in the last decade. 8 of those investigations resulted in litigation, which is the highest number in the last decade. Focusing now on energy regulation. President Biden made it clear from the first week of his presidency that energy and the environment would be important areas of focus, particularly climate change. Taken together, Biden's orders seek to roll back recent regulatory changes, curtail fossil fuel production on federal lands and offshore areas, and promote the deployment of new energy technologies and infrastructure, among other things. President Biden has identified numerous regulations to be reviewed and likely rescinded, many at the Environmental Protection Agency and the Departments of the Interior and Energy. Biden's January 27th climate crisis order covers a wide range of initiatives addressing energy and the environment. In particular, the order promotes the development of clean energy by directing agency heads to consider promotion opportunities through federal funding, purchasing, and other policy initiatives, and to consider changes to the federal licensing and permitting process, including that on public lands and offshore. The order directs the Interior Department to pause new oil and natural gas leases on public lands and in offshore waters, pending a comprehensive review and reconsideration of federal oil and gas permitting and leasing practices. The Interior Department has said this does not impact existing operations or permits for valid existing leases, but has issued an internal order that effectively halts new permitting for 60 days. The climate crisis order also targets royalty rates for coal, oil, and gas resources extracted from public lands and offshore waters, indicating a potential increase to account for corresponding climate costs. The order seeks to eliminate all federal subsidies for fossil fuels, though it does not make clear what the new administration will consider a subsidy other than tax code provisions. Because the executive order directs future agency action on energy and the environment, expect more activity on these issues from the administration. That is this week's report on the first 100 days of the Biden administration. We will be back next week with additional updates.